All right, ladies and gentlemen, moving ahead to our next panel discussion where we have a very interesting topic. The topic is unlocking values, capitalization for growth. This is our last panel for the day. I hope all of you are having a wonderful time. In case any questions, you can connect with us, ladies and gentlemen. Now, as we move ahead, calling up my panelist for our next session, please put your hands together for Mr. Sharad Sharma, ex-CEO, BNB Paribas AMC. He has dedicated close to 4 decades to steering organization to stabilities and growth within the Indian banking and financial service industry. He has the distinct of having held leadership position in large reputed organizations like State Bank of India 6 years and BNB Paribas 33 years across many verticals like corporate banking, wealth management, liability management, assets management, and much more. He is here with us. It's an honor for me to invite him on stage for my next panel discussion. Pleasure having you here with us, sir. Next, ladies and gentlemen, inviting up on stage Mr. Mohan Tanksale, ex-CMD of Central Bank of India. He serves as non-executive chairman of Rubix. Mr. Mohan is one of the most senior and respected banker in India, having been the chairman and managing director of Central Bank of India and the CEO of the Indian Bank Associate IBA. Let's give a huge round of applause to him. Next, ladies and gentlemen, I would like to invite on stage Mr. Anil Ghelani, Head of Passive Investment and Product, DSP Mutual Funds. Anil has been working with DSP Group since 2003. The DSP Group has a legacy of then 150 years, making it one of the oldest and most respected finance service firm in India. I would now like to invite on stage Mr. Vishal Gupta, co-founder, First Bridge. He's having a 20 years of experience, including 14 years in various private equity funds. He has completed his MBA from University of Chicago, PGDBA from NMIMS, and BTech from Alibag Muslim University. Next, I would like to invite on stage Mr. Deepak Ghaisas, co-founder, Xfinity Ventures Partner LLP. Please put your hands together and welcome him on stage. Mr. Deepak is the former CEO and CFO of iFlex Solution Limited. He headed India operations from 1993 to 2008. And to moderate this session, I would like to invite on stage Mr. Ankur Bagaria. Let's welcome him with a round of applause. Over to you, Ankur. Thank you so much.
Good afternoon, everyone. I'm truly delighted to be moderating the second panel session of the day. Today on the panel, we have professionals from mutual fund industry, private equity, VC, and banking. We believe this will give us all-round insights onto today's topic. So a special thanks to everyone joining us on this Saturday. So without further ado, I would jump right into the questions. Shivam ji in the previous session touched upon US Fed rates. So Sharad ji, I would like to understand from you like how an Indian entrepreneur should look at this high interest rate environment.
See, there are two things which you're talking about. One is the international part in terms of inflows from foreign countries. And the second is domestic. I'm sure domestic we can have more discussions here. But covering the international part, the previous speaker, Mr. Chakravarti, has given a big picture in terms of what is happening globally. Now, I would just go a little backwards and tell you that what happened post-COVID was very different from what was happening during COVID and things like that in US. In the sense, you heard that payrolls, just to ensure that people are not asked to go home or possibly their incomes levels are maintained, and because of that income levels being maintained at payroll levels, as well as individuals were given kind of money. So a lot of money was pumped in during that point of time. And during COVID, people could not have spent that money. So it was more of savings, US higher savings in terms of ever possible because they just could not spend the money. Now, post-COVID, what happened? All that money went into the marketplace, and you saw high inflation, and then you saw within 10 months the rates booming at 5.5 today. Now, will that all impact our inflows? I think it will not be as same as what possibly we were forthcoming earlier. But let's also remember that they had to increase their credit limits and things like that, debt limits. Now, what is likely is who buys their US Treasury bills? Let's understand that. China was one of the big buyers. Their economy is not doing so well. Europe was. Their economy is also a little weak. Japan still is a strong one, but for the first time after many decades, Japanese interest rate is also increasing. So the carry trades may get impacted. Now, if the carry trades get impacted, probably the US dollar strength may start weakening a little. What Mr. Chakravarti also did mention a little bit, because the US index today is 104 or something, and the prediction on his chart was around 95, 98 next year. So one has to be very careful as an entrepreneur to see that your FX liabilities are matched and you have enough cash for emergency purposes. That is what, in short, I would like to say. Thank you.
Thank you, Sharad ji. Anil ji, if you would like to add anything on this.
Sure, I think very good point. And the way you mentioned the connectivity with the entrepreneurs, basically, one is capital markets, one is the economy. Our friends from ICICI Bank also outlined. In some form or fashion, that is, let's leave it for the economists and the market participants. Right? Net, we want to, some of the friends over here, they are entrepreneurs, they are raising money for their business, they are helping companies raise money. So I think it is important to understand the impact for us, for our business on a day-to-day basis. So for that, I would like to highlight one thing, that structurally, I believe that the way in which the very sharp increase of interest rates has happened in the last 12 to 18 months, definitely that's not going to continue for long. Hence, keeping that in mind, I believe currently we are in a very sweet spot. If you are an entrepreneur based in India and looking to raise capital, maybe we are gradually going to see a very comfortable interest rate regime in which you have a good capital intake, you are in a position where there is a good growth upcoming. Structurally, there is a favorable scenario if you look at global investors looking to come into India. No doubt, when interest rates were being increased in the US, many global investors were rushing over there, but now that tide has started changing. If you see even in Indian capital markets in these last 8 months, we have seen $15 billion of money from foreigners come and deployed in India. So whether you are an entrepreneur looking to raise capital or enhance or expand your business, I feel it's a great time. We will see change in the interest rate cycle from today. Let's say, for example, when we host the next annual Bagaria Conclave, definitely we will be seeing a much more benign interest rate scenario, which will benefit the businesses, broadly speaking.
Thank you, Anilji. Mohanji, I'll come to you next. Shivam also touched upon the optimism about India, and there's a lot of optimism about India and the future of India. If you could tell us, what do you see India in the next 5 years from your perspective?
Well, thank you. As a banker, I would like to give a perspective that I've been in the industry for almost 5 decades, and the 3 major cycles which all of us should know. One was 1991, second was 2008, the global meltdown, and I think if you take the era of 12 to 17, 18, I mean the worst phase for the banking industry. I mean, from that perspective, I very strongly would like to say very clearly that there is a lot of value which can be unlocked. Again, talking from the banker's perspective, the way banking industry is growing in the size, today the size of the banking industry is 300 lakh crore plus. And a respectable credit deposit ratio of around 73% or so. If you recall in 2000 also, it used to be 50%. And the bankers were called laggards. and today it is almost 73%. But there is another measurement which economists will agree, that is credit to GDP ratio. And unfortunately, the credit to GDP ratio of India is still very low as compared to the developed countries. And that excites me, that there is huge, huge potential that the India can really exploit. I think the investors are definitely looking at India as a destination. Today, the FPI and FII ratio, globally, probably we are the highest recipients. But I will take the view to the first panel, where a lot have been spoken about the governance, transparency, disclosure, and I will add one more, that is your compliance to ESG. That is environment, social, and governance. I think if we are, as an entrepreneur, are ensuring all this, I am very sure that there may not be dearth of opportunity for you to raise the capital and getting the investments.
Thank you. Vishalji, you once said that there has been optimism about India in the past as well, but India has not always delivered on those optimism. Can you share with us why do you say so, and are you seeing anything different this time around?
So I think, am I audible?
Yeah.
So I think with India, in the past also, there have been occasions, and right now India is again looking like a shining star. But somewhere, for whatever reasons, the delivery has not been what people would have expected, whether in terms of returns from the stock markets or whether how the banking sector went through the challenges from good times, then very bad times and all of that. So generally, it has been the case that while the optimism is always very high, because from a global investor perspective, this is one of the largest markets, which is waiting to be tapped. So whenever things look positive, everybody thinks that this is, because there could be pockets of growth, but other than China, we are the largest market. So eventually, everybody would want this economy to really succeed, because world is looking for another big economy after US and China. But so far, that has not been fully delivered. But this time, at least from my perspective, the way I think is that our banking system is perhaps the healthiest in last 10, 15 years. And hopefully there are certain processes and everything has been that the healthiness of the banking sector will continue. We have had very significant reforms in the indirect taxes. And every month we are seeing perhaps benefits of those. Hopefully there will be a reform in the direct tax code. So that would also mean something better on the tax collection side. And there have been certain regulations, because if you see last 10, 15 years, real estate, which tends to be a very prominent sector of any economy, in India was in a very dormant state. And largely it was because of the practices practiced by the builders. And with RERA coming in, at least my friends in private equity in real estate says that that was like a seminal event in the real estate cycle. And that has resulted now people have confidence to buy back, and now we hear that DLF is launching a project in Gurgaon and it gets sold in hours as if, and it's a very, very expensive project, but people have confidence that this project will get delivered and all. So hopefully real estate will be booming. We have a huge capex driven, productivity driven capex happening. So looks like things will be better, but I hope we don't go overboard in either the capex and we keep the strength of our banking sector intact. Then hopefully this time it will be different.
Deepak ji, would you like to add from an eye of a VC?
Yeah, I think when we started, there was no concept of VC in '93. So we got the VC money from US. But today when I see last 10 years, I think today there is a lot of money in the market. And rather than idea chasing the money, money chasing the ideas. So we require some good ideas to fund. And the startup scenario looks very, I mean, the ecosystem has gone up very well. I think we have one of the best ecosystems in the world. And the entrepreneurship qualities in people are much better than China, for example, or from many other countries. And money is there. What we need is good ideas, not Me Too ideas, not fake take ideas, but we require some deep take ideas which innovation and disruption. I think that they'll be funded very well.
Tempted to add one more point when the last panel was discussing about the IBC and NCLT. It's very, very important for all of us as stakeholders in the system. We have to see that every asset which is created in the country is performing. I'm not talking about the non-performing asset of the banking industry. I'm talking about the assets which have been created in the country. If they are allowed to be non-performing, if they are not performing to its potential, is a huge loss. And that is what it, when you said unlocking value, I feel there are so many assets in the country which can be made performing. And that's where the IBC or NCLT should really come forward. I don't think the promoters are important. It is the entity which is important, which should be made performing. I was very tempted to add this value when the discussion was on. Thank you so much.
Mohanji, you touched upon the health of banking sector in India, and Vishal also said something about that. So could you expand on the fintech rise recently that is going on?
Let me tell you, this subject is being deliberated for years, and the banking industry adopted the technology at the top now, I think, and we have always been talking about that fintechs. There is a collaborative cooperation rather than a competition. So I don't think there is anything like a competition. Every bank is looking for outsourcing a fintech which can add value to their initiatives of the digitization. I think we all should be proud the way NPCI has grown. All of us are talking about the UPI. Yesterday, the news was there, 10 billion transactions. There are a number of platforms which have got created in the banking industry, PSB 59 minutes. Then you have got account aggregation. You have got what you call OKN, ONDC. I will like to further add that, let me tell you that the banking industry is totally committed to the digitization. And that's where the SWIFT Global has got an Indian entity called SWIFT India. Don't mistake me, incidentally, I am with them. So it's all looking for complete digitization of the trade finance, the securities markets, so on and so forth. Similarly, you must have seen that the National E-Security Limited, which is a body under the IBC NCLT, complete documentation is getting digitized. I think there is enough opportunity. The only thing which the fintechs of the world should see that you are not on the Me Too kind of activity. You must evolve something new. And there where I feel there is enough opportunity if you are working on agri-tech, if you are working on reg-tech, that is regulation, compliance and all that. If you are working on wealth-tech, today, I mean, we all should be very happy the way the mutual fund markets, the way insurance and pension markets have grown. But if you ask me, have we achieved a real inclusive growth? I don't think. And thus, if you really want to bridge the gap and achieve the inclusive growth, taking Bharat into India, I think there is enough opportunities, and banking industry will be more than happy, because banking industry, say today the country has got 7 lakh plus villages, out of which the population of 1 lakh villages is above 5,000, rest all below. So if you want to really have inclusive growth, banking industry would like to have an extended arm, and the fintechs can do wonders.
Yeah. Bharat into India, that's a really good point. Deepak, do you want to add anything?
Yeah, I think one more point there in the fintech, because fintech is not just the provider of technology to banks, but banks need to be very cautious, because most of the fintechs are getting into the business of financing either or enabling the payments, the small banks, the payment banks. What is going to happen to me looks like that the profitable business of these banks with the lower overheads and lower cost of transaction, these guys are going to take over that business. Right from remittances to the payments to the bill payments and so on and so forth. Therefore, banks' overheads and their expenses will increase the cost of transaction and therefore the service cost. And the customers are likely to move towards the fintech companies and get their services rendered. So banks need to be worried about that part of it and make their structures lean and offer the better services and some more technology into it, including AI and so on. But I think the fintech companies are getting into the fast track, and banks need to be worried about it rather than happy about it.
I would like to say that there is so much opportunities even for the digital companies, the digital lenders to go ahead. But where would the funds come from? Ultimately, it is the banking industry which is funding for ultimate funding. The exposure to the NBFC is again going from banking industry. So either way, the banks welcome it.
Yeah, the only problem is that the technologies like blockchain, for example, will do away with the banking, with the banks. What we require is banking, not the banks. And blockchain will actually do that. And therefore, I'm saying the future, say 5 years down the line, there'll be blockchain technologies, the fintech companies, and banks need to be really worried about it.
I will just like to add two things here. Like so far, if we see whatever fintech has done, either it has been around the payment sides, and whatever they have tried to do on the lending side. Now, in my mind, Bajaj Finance is the biggest fintech in the country, but they have built a fintech in a traditional way. So far, what so-called the new age fintechs have done, at least on the lending side, has been that they have not given any credence to underwriting. I'm not taking everybody, but generally that has been the model. So somewhere there will be a convergence of both. And even today, while payment processing fintechs have become big, but still most of us are now using UPI, which are being offered by our banks. Because when this wallet thing went away and the UPI could be linked to the bank accounts, of course, Google Pay is big. Otherwise, largely people are using what is being offered by the banks. So somewhere there will be a convergence, and especially on the underwriting side. If the traditional discipline of underwriting, of doing a proper assessment of the customer is not followed, whatever may be the use of technology, eventually it will not result in value creation. So I think somewhere, it's very easy to get, but yes, blockchain and all could change the face of the banking, but I don't see any reason why the banks would not be at the forefront of that, because eventually the trust that they have established with the public for so long would continue to remain. So, and I hope that the banks would be at the forefront, and they have the wherewithal and they have all the access that they should be taking the lead on that front.
So I think we all agree that bank health is very important to the future of India. Yeah. Sharad ji, if you can...
The banking is a lifeline of economy. It is said that banking is a lifeline economy.
Sharad ji, from your perspective, if you can tell us, like in the next 5 to 7 years, which sectors do you think are you most excited for and why?
Well, when you talk of sectors, to me, first is the financial, the banking itself, because that's the lifeline which you just heard. If the economy is going to grow, the banks are definitely going to benefit. That's for sure. The second is infra, because whatever we say we have seen in the last few, let's assume the last budget with state and center, it's like 10.68 lakh crores, which is going to be spent kind of a thing, and this will increase now. So infra is something which probably a lot of suppliers are going to benefit out of it. So to me, infra is another second sector which I would be very much interested. The third is, of course, the AI and EVs and all those technologies which are coming in, because they are in a nascent stage in some corners, but somewhere it's already advanced. So these are the sectors which are going to benefit. See, the traditional sectors will also benefit, but it not as fast as compared to the ones which I am mentioning.
Sure, sir.
I mean, we saw the presentation from economists. I think your GDP is still dominant of services sector and not the agriculture and the manufacturing. And I think these are the two sectors where you will have to think of the innovation, as rightly said. If you're thinking of good innovations, I think agriculture sector has got a lot of opportunities. How do we do it? I personally feel, and I've been advocating, that the land aggregation is the most important thing in the country, where if you are getting into the land aggregation and then production, your productivity and profitability will substantially improve. How do we do it? How do we bring 5 farmers together to aggregate them? But that's what is the area where one can really look at. And similarly in the industrial sector.
Anilji would like to add on the sector specific.
Just on the lighter side, your question was very simple. Next 5 to 7 years, kaun sa sector acha chalega? Everything, in my view, in 5 to 7 years, overall we are a growing economy. We'll do very well, just on the lighter side. But structurally, currently, there are 2 sectors where I am very bullish on in terms of listed markets. First and foremost, that is auto and auto ancillary. We have seen a lot of growing demand in that space, whether, as sir mentioned, in newer area technologies like EV or related, or structural demand in terms of the legacy way in which the vehicular movement has been happening. So whether passenger vehicles or commercial vehicles, both sides. So auto ancillary is one good sector which we can focus on. And the second sector where I have a little bit contra bet or an alternate view is the IT sector. A lot of people over here believe that in IT sector, India has been left behind and the main growth is happening in the US markets, right? The AI, ML, the deep technology research approach. But I believe most of those companies in the US are very difficult to access from here, sitting here in India. Structurally, the Indian IT sector has been in a good shape. Our share in the global IT sector has been increasing year on year. We are about 12 to 15% of the global markets. So I feel IT stocks in general, broad sector of India IT is relatively better valued right now. So that can be a good opportunity from investment perspective. And as I said, to conclude, if you are an entrepreneur, I believe broadly speaking, whichever area you are working on, we are in a very good phase of time for the next 5 to 7 years, definitely. So like in my last point, I mentioned that in Bagaria Conclave of 2024, now 5 years later means 2029 or 2030, most of us sitting here will be having maybe 2x, 3x of the revenues or profits in whichever area you are setting up your business in.
Vishalji.
Generally, I would think manufacturing as a whole would do very well. And I also think that consumption, especially discretionary consumption and consumption of little bit luxury, will do far better. Now, from a stock market perspective, those companies tend to be very expensive. So I don't know from a stock market return perspective, but largely I think from unlisted investments because we run a private equity fund. And as a fund, I think we would be very excited about one, the manufacturing story, and secondly, the consumption, especially on the discretionary and the luxury side.
So you see like Indian consumption growing the growth, not the exports. Is that the theme?
Yeah, so I think domestic demand will remain a bedrock of our economic growth. Of course, there will be opportunities like in electronic manufacturing and all. There are huge opportunities that are emerging on the export side, but still domestic consumption and the capex that is being undertaken will be 2 very big drivers of every sector of the economy.
Deepak ji, you have a front row seat in terms of the technological changes that is happening. So could you share how technology is disrupting industries and your take on the AI in India that is happening?
Sure. I think I will agree that all the sectors are going to do well, provided they adopt to the new technologies. If they continue to remain the same way that they were doing the business, I think they're likely to extinct. Okay, that's a natural law. On technology side, I think now IT sector, for example, IT sector is not going to be independent. It is going to get converged with every part of every industry, right? Right from AI, for example, which is talked about. Slowly, the jobs will be done more by the computers than, like we fly the aircraft and actually pilots are doing nothing inside. The computers take care of everything. They are there just in case required. And similarly, right from manufacturing, with robotic manufacturing coming in, 3D manufacturing is another area where manufacturing scenario will completely change. And for example, you want a shirt, you can do your shirt yourself, and somebody will be printing that for you of your size, color, texture, and everything. So there will not be what we call as a mass personalized manufacturing. And that's how you're right from your cars to your refrigerators to everything will be manufactured. Again, I'm talking about 10 years down the line, but 3D printing definitely will do different things. Augmented reality is another technology which will do entirely different things, like tourism, for example, the airlines will have some effect of that, but that is something what we need to sort of look at. And similarly, I would say right from banking to real estate to manufacturing to auto industry and so on. We have not yet talked about the autonomous cars coming in without drivers. We don't know what drivers are going to do then. There'll be huge demand for autonomous cars. Electric vehicles, the petroleum will go away, and so on. So people will have to adopt to the new technologies. The generation is changing, and the new generation will demand a lot of different kind of products and services, and you will have to provide the same, right from your healthcare delivery to your car delivery or pizza delivery. I think the technologies are going to be very important. They will change the face. If you don't adopt it, you will extinct.
Vishalji, many a times in the family business, there comes to a point where they have to decide whether to raise equity or not. So can you tell us in your experience how a family-owned business should approach this strategic decision? And what are the broad pros and cons?
Yeah, so I think I have been investing in private equity for last 15 years. And one of my investments, Prasad sir is sitting here, it was a fully family-owned company. And I think he is also having a session, so he should highlight. But whatever I have seen in last 15 years, and we have invested in some very, very successful companies, there are a lot of benefits of raising outside capital. One is the kind of impetus that it gives to your growth. It is very difficult to arrange those kind of resources from family and friends. And secondly, it helps you attract better talent, because eventually, if you don't have a very talented team, it would be very difficult to be a significant player. And it also helps you create credibility with the banks and everybody. So overall, I think it's a great decision. Now, what I have seen, people many times fret about, हमारा 2% ज़्यादा dilution हो जाएगा, 5% ज़्यादा dilution हो जाएगा, 10% ज़्यादा dilution हो जाएगा, या somebody will come and interfere. So at least I have never seen much logic to those thoughts, that if you have to become very big, how does it matter whether you own 75% of the company or 65% of the company? But in the process of trying to own 75% of the company, you may end up owning a very small company. And similarly, from an interference, that is another thing. Now, if there is a proper review mechanism, I don't think so there is any kind of an interference. It is just that it is bringing more discipline to the business. And I have seen a lot of family-run businesses becoming very institutionalized after taking private equity, and eventually after going listing, and it has been a great journey for them. So in my mind, if the capital requirement is there, a promoter should seriously think about taking capital at an unlisted stage, and then over the few years, going public.
Deepak ji.
Yeah, I think I agree with him, but what we need is there is no fixed formula for that. It all depends on what is family's ambition, what is their end game is going to be, and what that money is going to be used for. For example, I have done 3 IPOs, signed up in 3 IPOs, and last one was my Mindspace REIT IPO, right in COVID time, no road shows except the Zoom calls made, and 4,800 crores, and we got 13 times. Okay, so that was a good IPO. But unless you really require money, and money probably I would say equity should be the last resort to look at, because there are a lot of financial products which are available in the market, because the dilution comes in. And secondly, do you want to use that as a currency for acquisition of more? So there's an inorganic growth planned in the family business, then I think it is very important. So it is not a fixed formula whether the IPO should be done or not. To me, if you are doing very well, your cash surplus, I'm on the board of a company, pharmaceutical, where we are making 35% net profit. We don't require money, right? And we don't have any ambition to acquire more companies. So we are doing extremely well. So my advice to them is not to do IPO. But if you have got a large capex, the high risk items in the investments, then I think you should do it. But do it with things in mind that there is a huge compliance cost required, there's a huge disclosures required, whether the family is willing to do that. And then after that, they should not treat that business as a family business. Then my son will not become MD necessarily, or my family members don't come on the board, because there's independent directors and you have to listen to them. If you're ready to look at all that in toto, then I think the IPO is a good solution, otherwise not.
Sure, sir. Yeah.
Just to share what my co-panelists have just said. See, it's a very emotional decision of saying, will I let go my control 100% or part of it? Will I let go part of my ownership and thing like that? So during my well days, when we were meeting promoters, this is a question which was the first to answer, if you ask me. Then the second thing, what we just heard, do you really require cash perpetually for this expansion or project? Or is it something which possibly your cash flows will cover it up in the next few years? So is debt a better option, or is really raising money through whichever may, whether it is angel, whether it's startup, or whether it is private equity, or whether it is IPO? Is it something which you are willing to live with because it is never to be repaid? Buyback and all will come much later. To me, if you're going in for that, it is like saying this will never be repaid. So it's good for you, but the point is the debt is limited in terms of the years you're going to service. It's a tax chargeable part of. So again, coming back to the main point is, for what do you require this cash? And how long do you require this? Perpetual, I think that's the best objective which is being heard. If I were to just share quickly, if you have 1 minute,
Sure,
some statistics which KPMG or somebody published earlier. Family-owned businesses usually finance their projects expansion. Bank debt is almost 73% most of the time. Internal profits, of course, 62, which is their own. The PVC is around 49, but with different variances, with strong agree, maybe kind of a scenario. Bonds in India are still not popular, but that's 24 globally. Direct investment from HNIs, that's correct, around 22% kind of a thing. Other family businesses, if you have your own relatives who would be willing to invest, is around 21 kind of a thing. IPO, 20% kind of a thing. Family members, 15% kind of a thing. And mortgage of our own properties and receivables, which are around 17%. So that's what globally we have seen in terms of family businesses financing, usually. So I just thought this statistic may be helpful to mull over in terms of everywhere. It's the same emotional issue, then how do you answer it? Thank you.
Thank you so much. I think the team is constantly telling me that we are overshooting our time, so I would like to conclude this session here. Really, big thank you to all our panelists for sharing their insights. Can we have a round of applause for them, please? Thank you.
Thank you so much for conducting it so well. Yes, sir.
One
please.
sentence, when we talk of unlocking value, the biggest value which is available to India is a demographic dividend. China is getting older, Japan is old enough. And if India is not really encashing this opportunity of demographic dividend in another 5 to 10 years, probably will be in the same line. So unlocking value of the demographic dividend, the young generation, skill development, putting them properly into the different activities is very, very important. Thank you.